Hi and Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Syuhada binti Abdullah. My ID number is PDA 1905096. Definition of taxation. Taxation is a term for when a taxing authority, usually the government, levies or imposes tax. The term taxation applies to all types of involuntary levies, from income to capital gains to estate tax. Though taxation can be a noun or verb, it is usually referred to as an act. The resulting revenue is usually called tax. Objective of taxation: economic development. One of the important objectives of taxation is economic development. Economic development of any country is largely conditioned by the growth of capital formation. It is said that capital formation is the kingpin of economic development, but LDCs usually suffer from the shortage of capital.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Najmi Abdul. My ID number is PDA 1905076. Today I would like to talk about scope of charge. Scope of charge is the chargeability of income is governed by Section 3 of the Income Tax Act 1967, which state that income shall be for tax for each year of assessment upon the income of any person occurring in or derived from Malaysia or received in Malaysia from outside Malaysia. The price occurring in or derived from Malaysia connotes the sources of income must be in Malaysia. Income accrued in or derived from Malaysia will be taxed at the time of accrual or derived, notwithstanding with the fact that the income may not have been removed in Malaysia. And the second one is type of tax. There are two types of tax, direct and indirect tax. A direct tax is a tax that a person or company pays directly. For example, income tax is taken out of your salary. And second one is an indirect tax is paid by a third party. For example, when you buy a TV, there is a VAT charge which is included in the price. The consumer does not pay for it, but the firm who sells the good is responsible for paying the tax to the government on your behalf. That's all from me. Thank you.
Today I will present about classes of income. Section 4 of the ITA 1976 has listed down the classes of income which tax is charged, and they are as follows: gains or profits from a business, gain or profits from an employment, dividend, interest or discount, rent, royalties or premium, pension annuities or other periodical payment, gains or profit not falling under any of the foregoing paragraph. In addition to the above income, there are special classes of income under Section 4A of a non-resident which derive from Malaysia and will be chargeable to Malaysian income tax. They are as follows: amount paid in consideration of service rendered by the person or his employee in connection with the use of property or right, amount paid in consideration of technical advice, rent or other payment made under any agreement for the use of any movable property.
Assalamualaikum. My name is Natasha binti Johari. My ID number is PDA 1905079, and I'm going to explain for basis period. Usually, your business basis period will be the same as its accounting year. In the early years of your business life, if you're not preparing account to match the tax year, you will have to work out your profit for basis period that don't match your accounting year and include those on your tax return.
This often result in you having to pay tax twice on the same profit, but you will have this tax refund if your business ceases to trade or change in accounting year end. For example, a business start trading on 1st January 2014 and decide to prepare account to 31st December each year. Next, I will be explaining for chargeable person. The trustees make up the trust body, and trust body is chargeable person for income tax purpose. All the trustees of trust are jointly and severally responsible for doing all acts and things are required by the Income Tax Act. For tax purpose, the relationship between the trust and trustees is that of principal and representative. For example, keeping record, submission of tax return, and payment of tax or debt due to the government. However, be note that the trustees of a trust are responsible for payment of tax, debt or penalty only up to the assessable money from the trust. This means that the trustees cannot be compelled to pay out their own pocket money to settle the tax debt of the trust.